All right. Let's see. Live here. Socials came up quicker than normal. All right.
Woo!
Woo-hoo. All right, let's get started. Hello, Smart Money Tea podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. And today I'm joined with Doug Hagerin. Hey, Doug.
Hey Kirk, hope I can be here for you today, since it sounds like my internet has been crap the past couple of weeks. So I'll be here off and on as needed.
Hopefully your brain is working fast on your computer, Doug, because it is lagging a lot.
No, I doubt it.
Doug's sharper than that. Maybe not after a few whiskeys, but
That's right. Well,
certainly before.
thankfully, we don't do the podcast, after whiskey hour. So that's good.
Oh, that's good stuff. Well, happy New Year, everyone. This is the second live podcast of the year, and we've had a little time to put some stuff together. So this will be an interesting wrap up, and I don't want to call it a prediction. Maybe we'll do that next week, but we'll talk a little bit about 2026 and what that entails. It was a crazy wrap up to the year. Those of you who were listening to live shows in the last 2 weeks know what I'm talking about. I mean, with the precious metals, platinum was up 11% in a day, down 9, up 6, down 2, up 15. Like, it was just crazy. And silver was riding the bull as well. Gold was actually a quiet participant. It just kind of hung out. It wasn't volatile at all. But we definitely started to see a lot of year end. What typically happens in the year end when people are not working. So this happens. It doesn't happen in the summer so much because everyone's on vacation, but in the Christmas New Year period, the Santa Claus rally period, you usually have some noobs working at the trading desk, and all the big traders went home, so no one's really doing much. So the volume is low, and because of that, people can move the market around really easily. And so I figured most of that had to do with that, but it wasn't. There's a lot going on in the global markets, as we've come to find out in the last week since the show. We our armed forces went and grabbed the president of Venezuela and perp walked him down the streets of New York. I mean, no matter what you think of Trump, you can't say he's not interesting or entertaining. Like, it was just
some people sit on the sidelines and are keyboard warriors, and
not him, not that guy. That guy never sleeps. I'll tell you. Like, I mean, I don't know if it's right or wrong, and I know everyone's got an opinion. I just think, wow, like, that guy's got some grande cojones to do stuff like that. And it's not the first time, right? We did that with Noriega, so it's not the first time that's happened. But it is interesting, and I want to bring this framework in because I think it's important. It's less about the politics and more about what it means. So when I found that out, it was Sunday night, I think. Or Sunday or Saturday night, one of the two. Anyways, over the weekend. So when I found that out, the first thing I did was I went to look at markets. I went to look at what does Venezuela do? Now, I know some of this, but if I'm an investor, here's what I do. Okay, Venezuela is changing. What does Venezuela have to offer? A lot of natural resources, right? Didn't take you 5 minutes on X to figure that out. There's actually a really interesting clip that I see floating around on X, which is from there's an Amazon show which I think it's called Jack Ryan.
Yeah. It's based off the old Clancy books.
Yeah, but I think that's the name of it. But it's basically it's the guy from The Office, John.
Yep.
I forget his last name, but the guy from The Office.
It's Jack Ryan. It's the same character that was in the movies with Harrison Ford and anyway, they're not coming to me. Anyway, yes.
Yeah. So you have Zach Pine, I think is his name, right? The guy who did Jack Ryan in the recent movies. The guy who played Captain Kirk in the new Star Trek.
Oh, yeah. Yep. I didn't see those.
I think it was anyway. So so this is a season, 3 seasons. I thought it was quite good. It was interesting. So there's a scene where he talks about Venezuela, and he's basically teaching a class in Venezuela about why they're important. and that's floating around the internet. It was a really accurate depiction of Venezuela, and it was a really good scene, and it just so happened to be out there. Anyway, so what I did, and use this as a template for what you should do. So you see something happen, some global macroeconomic event, right? Like Israel goes in and bombs Gaza, or we go in and snatch the Venezuelan president, or we go to war, or sorry, Russia and Ukraine go to war, not we, because we're not doing it. Wink, wink, nod, nod. But all these global events, the first thing you should do is say, all right, how does this impact my investments, and how does it impact investments as a whole? So going to war in Ukraine initially caused the markets to go down for like 2 days until people realized, you know what, Ukraine doesn't do anything. So we're okay. Our investments are just fine. Gaza, you might think, oh, the Middle East is on fire. It's terrible. I don't know if you've looked. The Israeli stock market is at all-time highs. It pretty much has gone straight up since that happened. When Obama got elected, you think, oh, gun companies, they're just going to get killed. Nope, all-time highs. The best performing companies in the S&P 500 were gun companies after Obama got elected.
Yeah, Kirk, I want to add to that. The funny rhetoric, anti-gun, he actually legalized carrying firearms in the national parks. So
yeah, I mean, my point is whatever you think is going to happen doesn't. Here's one more. Trump gets elected. America first, right? America first, screw everybody else. What were the best performing markets and stocks in the last 12 months? In his first year of presidency, what were the best countries? Every country but the US. Virtually every country outperformed. The US was up like 17% last year. You know what? Everyone else did better. Europe, the sleepy museum that isn't doing any innovation at all, they were up like 30, 40, 50%. Different countries, different returns. The Middle East did well. Everywhere did well, except the US. I mean, the US did well, 20%, 17% is pretty good, but not as well as everybody else. So even though we're America first, what's really happened is America was last and everyone else did really well. So my point is just because the facade of what you think is happening, you think certain things are going to happen and they're going to be good or bad, it's not necessarily true. And if you want to know whether you're right or wrong, here's how you tell. So what happened on Monday? Well, I wish I took a screenshot, but what I realized going in is what is going to impact the stock market on Monday after the Venezuela raid. Okay, here's what was going to happen. Venezuela has heavy crude. It's this terrible, poor quality crude that requires a certain kind of refinery. And only like 3 refineries, I think, in the area will do it. There
they call it sour crude, which is not good.
Yeah, sour crude, sulfur. It's what they make pavement out of. It's what they make your roof tiles out of. It's not something you run your car out of, but it definitely runs a lot of things in our economy. Anyway, they've got a lot of it. I think the biggest oil reserve on the planet, I believe, or second biggest. It's up there. And so if you look at that, you say, all right, well, that was pretty much in the toilet, and now we're going to go revive it. Well, who's going to suffer from that? Well, where do we get our heavy crude from now, our sour crude? Canada. Canada provides most of it right now. So who's going to suffer? Canada. And what else do they? What do you need to get this economy up and running again? You need infrastructure. You need Schlumberger. You need Halliburton. You need the big oil companies like ExxonMobil and Chevron. Company, I think Valero did really well. So if you look at a lot of these stocks, I just looked at all the oil companies and said, hey, what are the best performers? And I went down the list. I'm like, all right, here are the best performers. You know what the worst performers? They were up like, I don't know, between 6 and 9% on Monday. A lot of these, oil related companies. The worst performers, I only know the symbols. I don't really follow them. SU and CVE and CNRL. So basically Canadian oil companies, Canadian, sour crude companies. And if you look at that and say, okay, is that going to continue? I don't know. The next day they were down a little bit, right? Because it was a big pop. But are they going to continue? Is that going to be the trend? I don't know. I'm not an expert in oil. But you know what I'm doing? I'm watching it. I'm watching it to see what happens. Is this just a bump or is it a continuation of a trend? So when you see a big shift like this, it doesn't mean you have to jump in, because a lot of this is algorithmic and you got institutions trying to jump in and, fast movers, but there needs to be a continuation of the trend, because sometimes it'll bounce and then it'll come right back down. Because what it really means is, yeah, this is great, but it's going to take 3 to 5 years for this to impact those companies, which is probably going to be the case, by the way. It's not going to happen tomorrow. It's going to take a while. So realistically, is it going to impact? Not really. It will eventually, but not today. But of course, the market is a discount mechanism. So it's looking at the future and discounting to today, which is why the prices are higher. So what does that mean for you? It means you should pay attention to the energy sector. I don't know that it's going to change. It's been sleepy, and it may, and there's a lot of opportunity there, but for the moment it's sleepy. It hasn't broken out this year, despite the fact that that happened and it's impacted some things positively, but it hasn't really broke out strongly. We really need to see sustained upward trends in energy, because right now it's pretty much sleepy and flat. It's not a place you're going to make money right now, kind of like utilities. So that's the kind of thinking you should bring to investing, is how does this impact my investments? You don't need to be an expert. I don't need to be an oil expert overnight on Venezuela. I don't need to be an expert in the country. What I need to do is look at the price movements. Everyone else is smarter than you in this area, so watch what the price does. If I have a thesis, yeah, you can make a bet on it, but I would really watch the price movements, because if your thesis is wrong, you'll know really quick, because the price will go against you. So pay attention to these events, see if it causes trends to change or start or stop or reverse. Check them out to see if you're in the right area or the wrong area. So I'm watching, I'm looking, I got some ideas. Like if this starts to take off, I'm going to put some plays on and I'll let it ride. But at the moment, I'm not convinced that energy's taken off. I'm not convinced this is going to do what we want. What it's really going to do is going to depress the oil prices, which I think is Trump's intention for the next 9 months, at least till the midterms are over. There's a lot of pressure being put on oil prices and they're dropping rapidly. So, you know what that's going to help? That's going to help transportation costs. It's going to help the profits of transportation companies. It's going to help the profits of these retailers. It's going to help the profits of anyone who requires oil as an input, part of their expenses for their goods. So a lot of companies could have increased profits because of this. Now, I'm not saying it's going to happen overnight, but that's how the market's reading it. So you should be watching this week what did well, what didn't, because that is going to be instructive, because you may have missed something and say, why is this going up? And then you can reverse engineer it and say, oh, ABC's happening. This is how the market's reading it. Let's take advantage of that. Okay. So keep that in mind as a template. We talked about it in the last 3 months with gold and silver. We use the same template. Why is it happening? I don't know, but it's happening. Oh, central banks are buying a ton of it, and the institutions are buying a ton of it, and the banks are buying a ton of it, and so on and so forth. You don't have to know the reason. You can back into the reason, but what you really need to know is that it's moving, and is it fundamentally sound? I don't know, but you need to make sure that there's follow through on the price. What are some of your thoughts, Doug?
Oh,
you're in a wonderful state, by the way. You got a lot of news in your state. We love you.
well, as of late last night, Minnesota now has its own Chaz area. So, in keeping up with every crazy thing that happens in America happens close to home here. Wonderful times. But I actually have a few things to say about about Venezuela, and I think the real thing to really watch here is the impact to China. This has the position, the opportunity, and again, where it can also impact investments, to completely transform influence in Latin America, South America. Now China did not use a lot of oil from Venezuela. They only used about 4 to 4.5% of its seaborne crude imports last year. But and that made it one of the largest buyers of Venezuela. But it wasn't a huge part of its energy supply. What really is going on there is that, well, we're not going to see an oil demand suddenly spike from this change to China. There is economic exposure to China. Beijing lent about $10 billion and secured oil contracts tied to that debt. And those deals are now at risk because the U.S. controls Venezuela's oil system. The state oil companies, investors had stakes in joint ventures that now are going to, face a very tough position at the table for renegotiation or impairment. The other thing too is that China's broader energy strategy, that could cushion the blow. I mean, China's less dependent on their oil because it has diversified suppliers. Middle East, Russia, Africa. Oh, by the way, Iran's falling as well. Crude oil from other countries can substitute, but here's the real issues. It's a geopolitical message. The move isn't just about oil. It's rolling back that influence in Latin America. But it does create some potential hurt on China from a cost standpoint. China's economy runs on razor thin industrial margins. How do they beat America? They have manufacturing margins that are extremely compressed, and even more so now with weak global demand, overcapacity, and price competition. Energy is a non-trivial input cost for steel, chemicals, cement, shipping, refinery. But when the margins are 2 to 3%, a 3 to 7 barrel increase in effective crude cost is not noise. That's margin destruction for China. The Venezuelan crude was cheap because it was a discounted depth. So China was getting these barrels at steep discounts due to sanctions, risk, and quality issues. And so what it creates is China still has other sources, but when they're dealing with razor thin margins, the average input cost then goes across the system, which can be deadly in a low margin environment. If they have to turn to other sources, they can replace with Iran, Russia, and Middle East heavy crude. But again, we know what's going on in Iran right now is a good chance with what's going on over there, which, now if anybody hasn't been watching the news, likens what happened with the fall of the Berlin Wall. There is rumors that the Ayatollah and the mullahs are now in Russia, that they've left. I mean, it's under potential collapse. There's a possibility that Iran could now side again with the West as it had before. So now you've got discount fluctuation, sanction evasion would cost money, shipping distances, insurance premiums rise. All of that, where are you going to feel it first? Well, the refiners are going to feel it first, especially independents. And then you're also going to, China's edge has been buying the cheapest possible feedstock. Even if they lose these discounts, they now have to turn through to all these other areas. They're going to have to pay, economic, real prices. And if they're doing this in a weak demand deflationary environment, they can't just pass that through. They can't just raise prices. Temu isn't going to work, export markets won't accept it. Domestic consumers won't absorb it. So I would say that if I just wanted to summarize, another place to look is if you're looking at geopolitical investing, this is going to be very interesting to watch Latin America and to watch China as a takeaway from this as well.
Yeah, no, it's a great perspective. I think there's a lot that, and I'm just going to put this out there too, because there's a lot of speculation about what's going on and what happened and what will happen and why it happened. And I'll tell you, as there's some things Trump is very transparent about. You might not like what he's doing, but he's doing everything he said he was going to do. Like,
he didn't lie.
You can't call him a liar. Like, everyone calls him a liar, and he definitely is. He has a lot of hyperbole, and he definitely has a lot of things that he exaggerates and all that. I'm not saying he's truthful, but his campaign promises, he's completing a ton of them, and I haven't seen a president since as long as I can remember that's ever completed campaign promises. So he's definitely doing that, whether we like it or not. So, but I don't think we can fully know the ramifications of this. There is some talk that this is a get out of our hemisphere kind of move to China and Russia. It's like, this is our hemisphere, get the hell out. The problem is, and actually I listened to there was a podcast I listened to this morning with Tucker Carlson, and I know the liberals are like, you can't listen to that guy. Just hear me out. It was actually a pretty good dissertation on the transference from republic to empire. And what it was talking about was that we're making some bold moves. In the past 70 years, whatever, 80 years, we've still been an empire, but we were apologetic about it. And we hid the fact that we were doing it. We did it in secret. Now we're just overtly doing things. And while that's good in some ways, it's bad in other ways. So I thought it was actually a pretty even-handed way to look at it. It's like, look, this is good, but yet now the next president's going to do more because Trump is doing more. So the next president has more power. So the point is it was actually a pretty good perspective on the whole, what we're going through. And so anyway, so the point was, being an empire brings pros and cons with it. There's pros because you kind of do what you need to do and you say, hey, this is what we want and we're taking it. And Trump said we're taking it for the oil. Okay, well, he's honest about it. Like usually we hide it and say, oh, it's genocide and they're Nazis and there's some bullshit reason, which is, why people are fighting Ukraine. No, we came for the oil. That's why we're here. Okay, at least you're honest about it. I think there's more to it though, but that's at least there was some honesty there. So here's what you should think about. There's going to be a reshuffling of the deck chairs. Okay, the Titanic is going down globally. Everyone's over leveraged in debt. There's a lot of problems, whatever. But the reshuffling of the deck chairs, I don't know if it's right or wrong. I'm not making a claim if it's right or wrong, but I'm just saying this is what's happening. And so the global financial order and the geopolitical order is being reshuffled. Some people don't like it. Some people do. I don't know what's right because it's all changing. That's why I'm giving the administration some grace because it's so different. No one ever thought of doing things like just going and grabbing the president and perp walking him. And that way you don't have to have people killed. You just grab the guy in the middle of the night and okay, you're done. Let's put someone else in power. Like I said, I'm not saying it's right or wrong. I'm just saying like it's different. So the things to think about are what is actually happening? What are the impacts? What are you missing? And so this is why looking at price movements are important because there's people that literally their whole job is sitting here trying to figure this stuff out. And so if the market as a whole aggregates and says, this is positive for this area, you should pay attention to that. It doesn't mean you have to understand it, but you should pay attention because there are smarter people than you. There are plenty of smarter people than me. I know that. That's why I follow the price because the price dictates what the smart people are doing. And so directionally, that's how you should be thinking. I'm not saying buying everything that's moving. That's not what I'm saying. I'm saying this should tell you what is important in the market. If I didn't have Schlumberger in my radar, I was looking at Halliburton. It's like, oh, Schlumberger. Okay, that's there too. I totally forgot about them. And so you got to look around and see when Trump was elected. Here's one. Trump was elected. What were the best performing stocks? Technology, financials. Financials weren't even on my radar. Like sleepy financials? What the hell? Why do I want to spend my time looking at financials? Those skyrocketed the day he got elected. Never would have thought about financials. So just think about these major moves and try to see what's the market saying. In an election, you know what the market's saying. The first day, the market's already handicapped this. They know what's going to happen. So pay attention to that. Financials have done very well. They're going to continue to do well, it seems. So, as long as there's a steep yield curve, they're going to do very well, which is the way it seems to be going. So anyway, something to pay attention to. I'm going to share this and then we'll talk about, you know what? I'll share this at the end if we have time. I want to get into the year-end returns because I want to run through this quickly and get Doug's thoughts. So, all right, so we're going to run through the year-end returns here, and this is the wrap-up for the year. It's actually not wrap-up; it's the end of the first week. But if you look at the 12-month, it's pretty close to this. So this is the first week. This is year-to-date. This is the first week of January. Best performer is small caps, micro caps second, and then you got mid caps, and then the sleepy NASDAQ was last at 1%, where the Russell 2000 is up close to 5% year to date. Last 12 months, the Russell's up about 16.5. The Nasdaq's up 20. The S&P is up just under 17. The Dow Jones up 15.5. Okay. So you should notice there's a new year. Well, what happened to the Russell 2000? What happened to small caps? Maybe I should pay attention to that. If you look at the technical analysis, it's actually at a point where if it breaks out, you might want to pay attention to it. Here's the sectors. Year to date, materials are up the best. Like we talked about, the silver, gold, precious metals took off. Copper took off. Steel took off. Aluminum took off. Like metals, materials all around up almost 5% first week. Last 12 months, only less than 13. Energy's done well in the first week. We know why. Industrials have done well. Consumer discretionary. What hasn't done well? Utilities, communication, technology. Interesting. The last 12 months, the best performers were technology, communications, and industrials. Industrials are still up there. Something to take note of. Okay. Now I'm going to point this out. If you watched the stock market this week, you might have noticed that the worst performing stocks, at least in the large cap stocks, were FANG stocks. Yeah, you probably didn't notice this. In the last week, some of the worst performers were FANG stocks. Apple's down close to 5%. Nvidia's down 2%. Amazon was up a lot. Amazon was up 8.5%. Google's up 4.5%. Microsoft's more or less break even. But if you look at like the worst performers, AMD did poorly. You got some computer hardware didn't do well. So the worst performers were places you wouldn't have thought of. You never would have thought some of those stocks. GE Genova did well last year, and it was down like 8%. So there's some surprising ones in the first week, but just keep in mind that you think FANG stocks are always the best. They're not. And right now they're actually out of favor in comparison to all these other areas, right? They're at the bottom. There's no return, close to no return this year, and everything else is up big. So this is the first week. So just keep that in mind. I'm not saying they're bad. I'm just saying keep in mind that they are they're not the best performers, and you need to watch what's performing well. These are the different industries. Year to date, oil service, obviously because of Venezuela. Gold miners are still doing well. Aerospace defense, shocker. Trump just declared they're going to change the military budget from 1 trillion to 1.5 trillion, and he's got Congress approval. All right, let's buy the defense sector. That's all I gotta say.
Excuse me.
Yeah. Don't watch out for Raytheon. He didn't have a lot of good things to say about Raytheon, which I thought was actually amusing. The fact he called out after he came out and said we're adding $500 billion of defense budget. By the way, Raytheon, we're not giving you any because you guys aren't doing your job. Like, whoa. Anyway, I give him credit. You know, it's how you do it. You shame people into doing what they should be doing and stop wasting money and do your job. So kudos to him for those comments. But, you know, if you look at the worst performers, media, sports betting, you know, internet, insurance, drugs. So, you know, last year, some of the best performers we're looking at, gold miners up 155%. You know, quantum computing is up 40, semiconductors up 50, nuclear energy up 55. That's a sneaky one we've been talking about. Solar's up 40, artificial intelligence up 30, 30, cannabis, another sneaky one people weren't really talking about. Food and beverages down, oil exploration was down, and healthcare providers are down. So, you know, just keep in mind, healthcare is actually an interesting sector that people aren't paying attention to. It got beat up last year quite a bit, and then it bounced back pretty hard. But these are just kind of the areas that are doing well versus not well in the last week, in the last 12 months. Size, small cap's doing the best. Size does matter in this way. Small cap value is doing better than growth at this point in the year. Although last year growth did better, but at this point, value is doing very well. Major commodities, precious metals are doing the best. Ag and energy are doing the worst. If you look at regular commodities, uranium's doing great. I mean, up almost 16% in the first week of the year. woohoo. That's all I got to say. But last year, things that did the best, precious metals. Precious metals by far did the best. Things that did the worst were basically ag. So if you look at wheat, soybeans, agriculture did the worst last year. In a market where everything did well, ag did very poorly. Natural gas did poorly as well. If you look at global markets, here's what we were talking about earlier. South Korea was up almost 100% last year. And they were up they're the best performing market in the first week. They're up almost 10%.
How is North Korea in comparison, Kirk?
I don't know if they've been able to sell those trains that they stole. When you shoot off all your missiles, you don't have any assets left. You're shooting your only asset.
Well, hey, maybe that's why uranium prices went up.
Yeah, it could be. Then maybe they need more with I don't know what they're buying it with, but maybe with human lives and organs. I don't know what they're selling now. Anyway, so best performers so far this year: South Korea, Turkey, Israel. Once again, Israel. Last year, Israel's up 50%. Despite what happened, Israel's up 50%. Okay. One of the best performers, Italy up 50%, Mexico close to 50, 73% for Spain, 70% for Vietnam, Canada's up 33%, Switzerland, what do they do? Chocolate and watches, like they're up 28%. Where's Germany?
They hold gold for everyone.
Yeah, I know. Yeah, they do banking. That's why they make all the money. Germany. So Germany's up 33%. I mean, if you look at the world ex-US, which means the global economy minus the US was up 30%. The S&P 500 was up 17. The global economy trounced us last year, and Trump was America first. This is the lesson. The only countries that didn't do well, Saudi Arabia didn't do well, India didn't do well, which is a shocker because India should be getting a lot of our stuff we're pulling from China, but for whatever reason they didn't do well. Australia didn't do particularly great. And Turkey didn't do particularly great last year. But just keep in mind, there are markets outside our borders, and they're doing quite well. And there seems to be a trend where they might continue to do well. South America didn't do as well, but if you look at, where's Brazil? I can't see. Anyway, here's Brazil. Brazil was up 43%. So you look at South America, you might want to check that out because of Venezuela and maybe wink, wink, nod, nod, Colombia. So Magnificent Seven, as you can see this year to date, have not done well. Last 12 months, obviously they did well. Google, Alphabet, NVIDIA did pretty well. Let's see. And I think that's it for the year-end review. So the question you should ask yourself before I give it to Doug is, what are these areas were you in? And did you notice? Because precious metals didn't go up 150% in the last month. They went up pretty much like an upward diagonal line until September when they went straight up and then they went sideways. But you made money in the first half of the year before anyone knew about it. Same thing with precious metals. Same thing with financials actually did pretty well last year. But my point is don't be asleep at the wheel. We're in a new year. I'm still waiting to see what happens in the first week or so because there's actually been a lot of volatility despite like NASDAQ hasn't gone anywhere. Like it's still going sideways. It has not broken out higher. And the market is going higher. NASDAQ isn't, which to me is a head scratcher. Not in a bad way, but more of a, isn't that interesting kind of a way. So keep in mind, you don't always have to be in tech all the time. It doesn't always go up. There are other parts of the market that do well, and you might want to pay attention. So anyway, what are your thoughts, Doug? What are your thoughts for the year and, what people should be thinking about?
Yeah, I think there's a lot to go with that. I think one of the things that that stands out to me, and you're not going to like this, Kirk, because I'm going to have to give maybe a little bit of credit to your nemesis, Peter Schiff. And I know how much
we don't speak that word on the show. That's a naughty word, Doug. We don't use that word.
However, in his defense, bullionvolt.com. I have a chart on this.
Don't give him credit on the show, Doug, please.
Yeah.
That's
what'd you say?
Don't give him credit on the show, please. Don't give him a website.
All right. Well,
I don't want people to lose money, Doug. Come on. I want people to make money.
To people out there that might possibly be following other names that are very vested in their opinion, I have I have actually a graphic if you want to put up, talking about kind of where gold has been. This comes from investing.com, Yahoo Finance.
I don't know. You have 50 million charts, Doug. You're gonna have to be more specific.
I know.
Repost it.
You can let me share, Kirk. I'd be happy to share it. But gold. So it's an image that shows gold or stocks and the value of $10,000 over 25 years. In the year 2000, you invest $10,000 in gold or the S&P 500. Your returns by 2025, if you were in the S&P 500, you would have done okay. You would have ended up with $77,495.83, which is, by all by all intents and purposes, a wonderful return. Now, how do we compare that to gold, though? On the other hand, gold during that same time would have grown in value to $126,596.38. Now, this isn't all necessarily recently. A lot of this comes in two major spikes that coincided with gold. It took from 2000 to 2012. It actually had its greatest rise, and we've talked about this during that period between 2000 and 2013. The S&P 500 was a dog, and it had about 13 years of losing money. Gold went up significantly during that period. Now, 2012 to about 2016. That's when the S&P 500 took off. And during that period, gold was a dog. It actually fell. Your value would have gone from about 75,000 down to under 50, but still never lost enough value to be worth less than the S&P 500. That's, by the way, people, that's how bad it was for the S&P 500 between 2000 and 2012. That's how bad it was for the S&P 500 during the 1970s, 60s, 70s stagflation. I'm going to come back to that because I think it's a really important note in everything else we're talking about. Now, since then, interestingly enough, and this is probably an eye-opener to a lot of people, starting about 2018, if you look at the chart, the S&P and gold have actually been fairly lockstep in their movement. Now, gold's still worth more. And of course, as you can see, if you're looking at the chart, I can't see if you're sharing it yet. I'm sorry. Yep, good. You can see that gold obviously rose significantly, no surprise to anybody, over the last couple of years since 2024, where I love how they just condensed the chart. It's going like 4-year windows down to a condensed 2. But ultimately, other than really the drag on the S&P 500 from 2000 to 2013, and of course, at the same time, the huge spike in gold, they haven't really broken out all that much from each other. What's the point of what I'm saying here? Is I talked about this a couple weeks ago, is that a lot of people have learned through a lot of teachings out there, not from us, Kirk, that all you should do is just simply invest the S&P 500. And as a matter of fact, Warren Buffett says the same, has told people the same thing. And my argument to that has always been, yeah, that's fine because he's, for him, because he's telling you you're not smart enough to do what he does. The reality of it is that the S&P 500 does go through long durations that we've seen over the last 50, 60 years of underperformance. Now, where am I going with this? You just talked about how poor FANG, and of course, in FANG, we have the Magnificent Seven being a magical part of that, mostly the same names of companies. But they're not doing very well right now. And the S&P 500 is not in it. We actually saw, if you actually go back to if you look at the charts you showed earlier, one constant over that last year was the Dow. The Dow did pretty well last year. The Dow has started out pretty well this year. Now, is it a great gauge? Absolutely not. It's 30 stocks, but it is a true indicator of the value of those 30 stocks. The S&P 500 is not. The S&P 500 is. And if you're listening to this podcast, I hope this means that you don't go to FinTwit for your advice, but you'll see plenty of people out there on social media telling you, you can always tell the fools when they say, I would rather, why would I invest in anything? I'll just invest in 500 stocks evenly as a gauge of the market. That's not how the S&P 500 works. The S&P 500 is weighted based off the largest market cap companies in the S&P 500. So why am I saying this right now and I don't, I'm not making a prediction, but when we talk about the last couple of years, and it is without a doubt, if you've ever heard something called the investment quilt, which is where you can kind of look at what does well one year to the next. And a lot of times you'll see what's good one year is at the bottom of the other. And every asset class is colored differently. That's why they call it like a quilt, like a patchwork quilt. It has not worked very well the last couple of years. For a while there, it wasn't working because if you go back to 2013, emerging markets were booming and they were always at the top, but they have fallen off, and they've fallen off hard since then. They're coming back recently. If you look at S&P 500 recent, over the last, 10 years, you really can't beat it. But what's happening now, and I talked about this a couple of weeks ago, is that if you look at the history and use, again, one economic theory, Fama French, you look at that in terms of how diversification, the impact on outcomes, they have done some studies that show that if you have retirement income, if you're relying on your assets, that a diversification of many asset classes has had the best possible return of outcome of income. Now, Kirk and I would both disagree that you should just sit in that static. You really have to watch what we're talking about. But if you're also doing the same thing by just sitting in the S&P 500, the reality is there's a high probability that your longer term goals may not meet what you're expecting them to meet. Because if we go through another stagflation era, we go through another 2013 at some point, even if the Mag 7 underperform, it could cause the S&P 500 to start lagging significantly around the rest of the market because it does not have exposure to a lot of these other things. So this may be a time to start watching closely as to what worked before may not work now. And I think we're starting to see that a lot of macroeconomic scenarios are absolutely, are starting to come at play that definitely lead to this might be that shift that we've been talking about coming eventually for a long time. Hold on a second here. I closed out my window so I can't see the rest of my my stuff out there. So I'm just kind of I'm going to turn it back to you while I look at it, Kirk.
All right. While you're getting that, Doug, I'm gonna call the cops on you. I know they're busy dealing with all the people in your state, but I'm gonna call chart crime on this.
Yeah, you should. And I posed that for I've set that up for you.
It's a good chart. It's a good chart. I like it. Is very accurate, except for one thing. What's not told in this is that the very point where they started this was the very low point of gold in like the last 40 years or 50 years. I think it was late 99 was the very low point of gold. It was like $250 or $300 or something like that. So it's only up from there. If you look at the like pretty much the 80s and 90s, gold just went down. So Doug's correct. I mean, this is a really good chart, but it at the same point, people need to realize that yes, gold outperformed during this period from 2008 to 2012. It ripped. It absolutely ripped. You see what's happening now? It is absolutely ripping. And I would guess, I don't know the future, that it's going to keep ripping. But when you compare it to the S&P, every time I see these charts, I just laugh. I'm like, yeah, well, why don't you take a few years off of that and see if it lines up the same way? Over time, here's the thing to keep in mind about gold. Over time, gold is a good hedge against inflation. It's a good hedge for purchasing power. Stocks over time should outperform gold. If you pick it at the right time, gold's going to look like a rock star. And we so happen to be one of those times where gold is the rock star and the U.S. markets are overvalued. So what does that mean? That means that effectively, if you look at the stock market, most companies aren't really growing all that much. And they're underwhelming. You got 7, 8 stocks killing it, and the rest of them are kind of sleepy. So, that makes gold look even better if we have a recession. But point being is it's good to note that the perspective is important of when you start to look at this. I'm going to share. What was that? Okay. I'm going to share a few companies that I wanted to also share, and then some perspectives for next year, and we'll let Doug wrap it up.
And while you're pointing that out, I want to say too, I mean, we are talking about a 26-year duration, a long duration of that outperformance of gold. which is for a lot of people their entire investing lifetime. It's a quarter of a century. And at this point, you're seeing the late term of that 26 years, gold starting to exponentially increase. So could it be a new normal over before? Yes. But the other chart also showed that significant dip that happened in the middle. If you look at the standard deviation of gold historically over the S&P 500, you can see in that chart, even with the lag, gold has been more volatile than the S&P 500 has over that period. The other thing too is that major start of that spike of gold between 2000 and 2013 was actually in a relatively low inflationary period, which again counters a little bit of the direct correlation between gold and inflation. But things, times change, things are interesting. I don't see precious metals, given the circumstances that we're in right now and what we've talked about the last couple of months. I don't necessarily see it continuing to blow up. I can't guarantee it, but I certainly don't see it coming down to earth rapidly either. Now, that is a play geopolitically that China could choose with silver. And by the way, they are one of the biggest holders of gold. So that's an area where they could, and when you talk about financials, if they wanted to counter what we're doing with Venezuela in oil, they could turn around and try to do some things there on precious metals, which would have an impact on our banks. So I'll turn it back to you.
Yeah. So, all right. So here are some. This is also the first 5 days. I just thought this was interesting. I saw this. If you look at SanDisk is up 41% in the first 5 days of the year. I don't know what happened. Don't care, but I missed it.
What do they do? They still make those little floppies. They still have a place for those?
I didn't realize it was still a business, but whatever. Valero Energy, beneficiary of obviously Venezuela, Schlumberger. You look through some of these Moderna, that's interesting. Halliburton, of course. Phillips 66, Intel, interesting. Wouldn't have thought that. Intel's up a lot today too. If you look at the NASDAQ, what are the best performers? Microchips, Micron. Micron's been like a late arrival to the semiconductor space in terms of performance. Mercado Libre, also interesting. If you guys don't know about that, it's basically the Amazon of South America, which is ironic because the Amazon's in South America. Anyway, forgive the pun. So this is the mag. This is the Dow, top performers of the Dow. Here's the Russell 2000, small caps. Look at this, 94% in the first week. I also was not an investor in this. I have to disclaim that. I'm not an investor in that. I wish I was. That would have been a great start to the year. I could just be like, all right, I'm done. All right, cash them in. I won. I won. I'm good. Anyway, I don't really know most of those. Oklo is up a lot today too. Nuclear Energies, a lot of these. So just, these are all kind of important things to keep note of. Here's the latter part of that list. So
Kirk, your other chart on performances did show microcaps were booming, and a lot of those are in the microcap space, which makes that. That's a tough place to invest. Don't recommend people going out and playing that one.
Definitely don't. Yeah, we're not recommending you get into microcaps. If you do it, you should probably use an ETF if you're going to do it at all. I actually don't particularly like microcaps, but they are an asset class, and if you like them, that's great. I saw this. We'll talk about this next week, but I wanted to show this. It's Bespoke. They put up some great charts sometimes, and this one was basically the pros and cons of where we are in the markets. Now, I'm going to share this chart. We'll go over it next week, and I'll reiterate this because I don't have enough time, but I wanted to share it just to get you thinking. So here's a list of pros and cons, 19 pros, 18 cons. And it kind of goes through, if you're looking at the market, we had a great year last year. International markets had a great year. Precious metals, everything had a great year except for like a handful of sectors. So if that's the case, are we in a bubble? Are we peaking? Is this it? Or is it going to crash? All these questions, right? Well, you don't know. Like, Doug doesn't know. I don't know. You don't know. No one knows, right? Unless you can see the future, and we haven't figured that out yet. So, and if we do, we're certainly not going to tell you about it. But anyway, so nobody can predict the future. But what you can do is you can analyze the risk. Okay, what are the risks of the markets right now? Well, like I said, we'll go through these next week. But the point is, there's a lot of pros and there's a lot of cons. It's still a bull market. everything we're seeing is still bullish. It doesn't mean we're not going to crash. It doesn't mean we're not topping. It means that everything we're seeing is very bullish. We're in the year 2 of a presidential cycle, which is not bullish, but Trump is different. And what he's doing is he wants to retain power in the second half of his presidency. And the way to do that is to go all out right now. And that's what you're seeing. So I expect this year is going to be a gangbuster year. It doesn't mean it won't be volatility, but I expect this year is going to be booming by the end, or at least by election time. That's what I expect to happen. And Trump's no dummy. You might not like him, but he's not stupid. And he wants to retain power. And the way you do that is by making everybody feel good, doing all your campaign promises, coming up with jazzy stuff, entertain, all this stuff. So just keep that in mind. I'm somewhat bearish. Like, I'm looking at it, I'm like, I don't like it. The market's feeling like it's on the edge of recession. Things are feeling squirrely, whatever. Like, that's how I'm feeling. But that's not what the facts say. The facts tell me that it's bullish. And the facts tell me that this is going to be a good year. It doesn't mean it won't be some bad parts, but it tells me it's going to be a good year. So if that's the case, I need to go against the grain with my investor psychology. I need to contradict what my brain is feeling, what my gut is feeling, and go with the facts. And as of now, the facts are saying things are going up. So keep that in mind. You might be afraid of all the 100, 150% returns you got on precious metals or some of the other crazy stuff that happened. That doesn't mean it's going to stop. So I'm not saying put all your money in it. I'm just saying that if you're riding the bull, I'm not sure now is the time to get off. But you should be knowledgeable and aware of the risks you're taking. If you're uncomfortable, take a little off the table. If you had a good year, if silver's up 140% and you made that, take a little off the table. Who cares? Make yourself feel better. You want to be able to sleep at night. If you can't sleep at night, it's not a win. Doesn't matter how much. I say this all the time to clients, but what good is money if your life stinks? If you're up anxious all night, worrying about your stocks and whatever they're doing, sell down to your sleep level, right? Sell down to your sleeping level. That means sell down until you can sleep at night without worrying. That's what you got to do. So find ways to do it. If you have questions, you can always call us. We do a lot with risk management. I know a lot of people have called me last week because we talked about this. We specialize in risk management. If you need risk management, call us. That's what we do. That's what we specialize in. Shoot us an email, and we'll talk about, if we can do that with your portfolio. But we'll just have a friendly conversation if you're interested. Anyway, Doug, final thoughts. You can take us home here.
Yeah, Kirk. No, I appreciate it. Final thoughts on, as it comes to me. Let's zoom all the way out. FANG is down. Gold is up. Iran, Venezuela, they're wobbling. The S&P right now kind of lagging. Small caps leading. That's not chaos. I would call that's rotation under pressure. Okay. And while the markets debate bubbles and peaks, and families are dealing with something that's, while the bubbles debate markets and peaks, family are dealing with something that's far more concrete. I mean, a couple of things I didn't get into today, but I've got some charts on this we can go into later. Raising a child now runs roughly $20,000 to $40,000. Okay. And by the way, one of the most expensive places right in your backyard, Kirk. College is consuming, 40 to 70% of median household income in large parts of the country. The American dream is now over $5 million lifetime price tag. Before you panic, that does not mean that you have to have $5 million to saved up to retire. It's all the cost of everything. The retirement minimum is going to be north of 1.6 million, assuming nothing goes wrong. And the reality is that's not euphoria. It also isn't leverage fueled excess. That's math squeezing margins, household margins, corporate margins, all getting squeezed at the same time. And so when we look at inflation, when costs rise faster than wages, another chart that I have that we didn't get into today is talking about the number of, what degree that you have, and we'd love to talk about. Everybody can just go to trade schools now, but the reality is that, depending on what kind of level of education you have, is a big indicator of whether or not you're make more than $20 an hour And there's, I also have a chart that shows the number of jobs that they plan on disappearing, like cashiers. So when wages are getting compressed in areas, when cheap capital is continuing to disappear, when leadership rotates instead of expands, what happens is eventually we don't necessarily get a clean crash. What you get is stress, trade-offs, bad sequencing, and there's a risk that nobody's talking about. And that's people are trying to fund retirement income and college using the same old growth-only playbook, hoping that markets bail them out on a schedule. I've said it before, hope's not a strategy. Timing's not a plan. And volatility, that is the wrong risk to focus on. The real risk is running out of your flexibility. So in a world where colleges compete with retirement, cash flow matters more than account balances, and the American dream continues to get more and more expensive. And you talked about healthcare, that's going to continue to get more expensive well beyond that inflation. The winners won't be the boldest forecasters. They're going to be the best planners. So better retirement is going to come from income structures, smarter college funding strategies, and assets with jobs, not just tickers. And that's going to change. And you need to be actively involved in watching that, because markets aren't going to ring bells at the top. They're going to expose the weak assumptions over time. And in this environment, structure beats predictions every time. Smart money families, they don't hope, they don't guess, they plan. If you want to learn more about how we organize and structure that for families so that they can have a clear idea of what they want through conversation and what they have and where they need to go, then check out more information on us, www.mergentadvisors.net. That is MERGENT, mergentadvisors.net.
Awesome. Well, thanks for coming on, Doug. And that's the show for this week. Thank you again for joining us, Money Tree Investing Podcast. My name is Kirk Chisholm, Wealth Manager of Innovative Advisory Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Remember to subscribe to the podcast on the podcast app you're choosing. You can also check out our show at moneytreepodcast.com. On our website, you'll have access to the show notes, resources, and the archive shows. Check out our YouTube channel. When you're there, please leave a comment and subscribe. Lastly, please leave a short and comment to the podcast app of your choice. Don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling products and services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send me an email to express your feelings. If you're seeking financial advice, talk to an oracle or a fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything. But I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do. So invest in your life.